Hello everyone, welcome to our webinar. Today we'll be talking about a very important topic, that is fundamental analysis in trading. Of course, if you're a trader, you should know about fundamental analysis, but a lot of traders don't always take it seriously, and that has been the cause of their not making a lot of profits in this particular market. So you need to keep fundamental analysis in check. You need to know what is happening in around you and how you can take advantage of it to make profits in the financial market. So let's get over to our slides as we continue. All right, so the next thing here is we'll talk about the types of market analysis. Of course, we all know that technical analysis is one of them, and of course most traders call themselves technical traders. They just trade the technical analysis and they forget a very fundamental truth. Of course, fundamental analysis is fundamental. It's very important. The truth about the matter is that it is one of those things that forms trends in this particular market. Most trends are fundamentally biased, they are fundamentally ignited. So if you don't follow the direction of fundamentals, your technicals might, even though you are very good in your technicals, it might affect your technicals no matter how good you are. But what if your technicals follow the fundamentals? Don't you think that will be an edge for you? Of course it will be an edge. So let's continue. Fundamental analysis is key to your trading. Okay, of course, when we talk about fundamental, we're talking about what happens around you, the news, what happens in the news. Of course, not every news moves the market, which is very important. Not every news moves the market. If a lion escapes from the zoo, that is not going to move the market. So you need to have news sources that will give you information that are tailored to your trading universe. Of course, not every trading, you don't need to know about what's happening to the musician, of course, except the musician buys a particular stock. That is when you'll be interested. Or if the musician buys a crypto or any other asset, that is when you'll be interested. But any other thing apart from that, it's not going to move the financial market. So financial market news are what you need in your journey. So news moves the market. So let's talk about fundamental analysis. If you take a look at this writing here, you see fundamental analysis focuses on the economic forces of supply and demand. Of course, in textbook economics, it tells us that when there's a lot of supply in the market, it's a good opportunity to be a seller, and when there's demand, you should be a buyer. So in this market, price can give you supply bias as well as demand bias. So you have to take note of that. So prices can move higher, lower, or stay the same. Of course, price can be bullish, bearish, or in a range. Okay, it can be in a range. That is where supply and demand are not really none is winning, or say the bulls and the bears are not winning, because I mean we call it a range. It is a ranged market. Of course, you can trade it with your support and resistance zones. So in fundamental analysis, what we are checking is the impact of the news on politics. Of course, you need to know what's happening around you. Remember, you are a global citizen. You need to know what is happening, especially in the key economies like China, Russia, UK, US, Australia, and a whole lot of them. So that is what you need to know. Okay, you need to know. Okay, the Queen of England died sometime last month. You need to be aware. How does that affect the British economy? How does that affect the British currency? Is that going to make it strong? Is that going to make it weak? Okay, those are the things you'll be watching out for. If it's going to make it strong, then it's going to increase the strength of the currency. Then you will be a buyer in that particular market. If it is weak, of course, you'll be a seller in that particular market. All you need to do is to find the currency pair to join them, whether on the quote side or the base side, to do your trading. Okay, so you need to know what's happening in the politics, natural disasters. For example, if there's a natural disaster in Japan, a tsunami in Japan, of course it's going to affect the economy of Japan, and the Japanese yen is going to be weak. If the Japanese yen is weak, you are going to be a seller in this market. For example, you can go to a pair like USD Japanese yen and you buy the pair. Remember, if you are buying the USD pair, okay, the USD, which is the base, that means you are automatically selling the Japanese yen. Next are sentiments. Yes, sentiments. What are investors thinking? What is their mindset? Where do they think the monetary policy is going to be? Is it going to increase by, let's say, interest rate? Is it going to increase by 75 basis point, 25 basis point? Is there going to be a rate cut? You need to know all this, okay? Economic factors and all the other things that affect the economy. You need to know all that, okay? So like I said about interest rate hike, of recently we'll be hearing about rate hikes, rate hikes, rate hikes. These are very important. If you've been trading for a long time, you will know that this the current condition we're in is just like the COVID-19 era. Okay, it's a replica somehow because the market is in distress and there's a cause people are calling inflation as well as recession. So recession is like a terminology in the market right now, so you need to know. So all central banks are trying so hard to fight against inflation. Okay, inflation, if there's too much inflation in the country, it's going to cause issues with consumer confidence, and that's going to be a lot of it's going to be bad for the currency. Okay, yes, so a lot of hikes have been happening. The European Central Bank hikes by 75 basis point, the US 75 basis point, the UK 50 basis point, and recently the Australian Reserve Bank of Australia gave us a 25 basis point. Of course, it was bad for them. Okay, of course, investors were thinking and expecting them to go by 50 basis points or to rival their European and US economy by 75 basis points. So all these are to fight inflation. Okay, then we will not forget about Russian sanctions by the European community. Okay, of course, the Eurozone is richly supplied by Russian oil. Russia is the largest producer, second largest producer of oil, and they are the largest distributor of gas to the European economy. So, of course, when they close the tap, we all know what's happening right now. Europe is in a mess. Germany is almost heading to recession, Italy, and so on. And of course, we've heard about the leaks. Okay, there were leaks, reported leaks, about 4 leakages in the Nord Stream 1 pipeline. Okay, so this is telling us that a return to the gas distribution back to the European economy is going to be a hard time, because Putin is fighting tooth and nail not to allow that to happen. Okay, he's trying to protect his economy as well as the Russian currency, the ruble. So this is very important. You need to know a lot of sanctions are going on, and a lot of people want to put a cap also. So it's just something we need to be aware of. If you don't have the fundamental analysis knowledge, if it is not part of your trading plan, okay, it should be part of your daily trading plan. Know what's happening and trade in that direction. Okay, the trend is your friend, so you need to follow the fundamentals and make it your friend too. Okay, right. Key economic indicators. So what are those things we'll be watching out for? There are a lot of things to be watching out for. Key indicators. So we have the PMI, the Purchasing Managers Index. What are purchasing managers thinking? Okay, you need to know about Consumer Price Index, which is the CPI. What is we'll discuss that as we continue. The PPI, Producer Price Index, the non-farm payroll. If you don't know about the non-farm payroll, you better sit down and call your friends to come and watch this, because it's very important. If you don't know about the non-farm payroll, okay, we'll talk about that in a jiffy. So we have the crude oil inventories. This is especially in the US economy. We want to know how much of their crude is in their reserve, how much is remaining. Okay, how does that affect their currency? We'll get to know that. Then we have the interest rate, very important. If you are listening to the news, if you are a fundamental trader as well as a technical trader, of course you need to do both of them. you are going to be hearing interest rate on a daily basis. GDP, yes, the gross domestic product. This shows you the health of a particular economy and so on. There are a lot of them. A lot of them have been coming out lately. Some of them initially do not give spikes as expected, but these days even some medium impact news are becoming a high impact. So we need to be careful. We need to watch out and see how that affects the economy. So let's talk about employment, unemployment rate. Yes, very important. So unemployment rate measures the percentage of total labor force that is unemployed but actively seeking employment and willing to work. So a high percentage indicates weakness in the labor market. Of course, if there's no employment in an economy, it shows that there's a weakness in that particular economy. Okay, when there are no job vacancies, that means that entrepreneurs are not bringing out they are not bringing out a lot of jobs. Okay, there are no jobs, entrepreneurs are not really active in that particular economy. If there are no entrepreneurs in an economy, then a lot of people will go out of work. Okay, and of course, when people are out of work, there's no labor, there's no payment, there's no consumer spending will drop, and of course it will affect the GDP and so on. So it has a lot of call it domino effects on the economy. So part of it is the initial jobless claim. So in the US, there is what we call initial jobless claim. It's a weekly, it always comes out weekly. Okay, it shows us how many people have applied for unemployment for the first time in the past week. So this is very key. So you need to know. So if you know that initial jobless claims is dropping, okay, if it is dropping, it's a good sign for the economy. It's a good sign that a lot of people are working. Okay, a lot of people are getting employed because the initial jobless claims is reducing. Is very significant. Okay, it can be a pointer to what might happen in the coming NFP. Okay, so you need to know that. Next is JOLT. Okay, JOLT is job openings and labor turnover surveys. Okay, so this defines jobs openings as all positions that are open not filled on the last business day of the month. So you need to know this and add to your arsenal. Okay, so how many job openings are in the US? Of course, job openings increased to about 11 million. It has been ranging between 11 million and 10 million in the US. And of course, if it drops, what it means is that if job openings is dropping, okay, that means there are less vacancies in the US. Okay, if there are more vacancies, it means there are available jobs in the economy, which is very, very good. Okay, so you need to take note of that to see how. Okay, don't forget, this is also a good pointer for the NFP. Okay, NFP, job openings as well as initial jobless claims, they are like opposites. The other one is vacancy, the other one is how many people are unemployed. So if you can do the maths, okay, it can give a pointer to the direction of the NFP. Of course, nobody knows the direction except, okay, let's leave that for another day. So let's talk about the popular NFP, non-farm payrolls. Okay, if you don't know about this, okay, you might be in a trade 1:30 depending on your time zone, okay, on a Friday, and it might affect your trade. You are going to see spikes of about 50 to 100 pips. Okay, it's very, very important you know about this. So non-farm payrolls measures the change in the number of employed people during the last month of all non-farming businesses. Okay, non-farm businesses. So non-farm payroll comes out the first Friday of every month for the US, and it's usually significant. Yes, it's highly significant. I've seen a lot of people double their account, quadruple their account in a few minutes. Okay, and of course a lot of people blew their account in a few minutes. So if you don't know that, okay, unless if you know how to trade the NFP, it will be an advantage for you. But if you don't know how to trade the NFP, of course it's going to be a danger sign for you. So it's something you need to take cognizance of. Okay, if non-farm payroll is good and is good for the US, that means the US economy is having a lot of jobs. It's mainly focusing on a lot of jobs in the US economy. So if the number of jobs increase in that particular month, it means it is good for the US dollar. The US dollar is going to be strong, and you are going to see a spike in the right direction. Okay, if it's good, it's going to spike up. If it's bad, it's going to spike down. Even though there are other technicalities to the trading of the NFP. Okay, if it is bad, of course it will be bad for the US currency, and a lot of people will sell it. The only thing about it is that immediately it is time, you just see a spike, so you may not really have time to respond or to react to that particular news. A lot of people trade this particular news. Some trade it before, a few minutes before time. Some react after the news has happened, after the spike. Some people trade the retracements. Okay, others sit on their hands. Okay, they don't trade even that particular week of NFP. They don't trade. So depending on your choice, you can pick whatever works for you. Okay, you can pick whatever works for you. Next is retail sales. This is a measurement of the sales of retail goods over a stated time. Okay, so this is a very good indicator of whether there is inflation or consumer spending. Okay, it shows us consumer spending, how much retail sales, what if it is good for the economy, it means that the economy is doing well, consumer spending is good. Okay, but if it is bad, then it's going to be bad for the currency. Okay, and a lot of people will be sellers. Next is PPI, producer price index. This is a measurement of the average change in selling prices received by domestic producers of goods and services. So it's a measurement of the cost of producing goods. Okay, so PPI measures price change from the perspective of the seller. This is the opposite of CPI. Okay, it measures what price change from the perspective of the seller. So we need to know, is it increasing or is it decreasing? Is it more than what the consensus are saying? Is it meeting expectation? Is it above expectation? That is what you as a trader needs to know about, so as to take accurate decisions in the market. So CPI is just from the consumer's perspective. You want to know the changes of purchasing trends from the consumer's perspective. So this is a key indicator to check inflation. Okay, we will know inflation, we will know whether consumers are having confidence or consumers are spending in the particular economy. That's CPI. Next is consumer confidence. Of course, this is a measurement of the level of confidence consumers have in the economic activity. So consumer confidence is key. It's a leading indicator as it can predict the consumer spending, which is a major part of the total economic activity. So as we continue, we'll show you the relationship between all of these and how you can take some major decisions and profit from the market. So if consumer confidence is good, it means people have confidence in the economy, and it will be good for the currency, it will be good for the economy. So a lot of people will be buyers. Okay, it is good for the economy. Yes, so GDP, of course, GDP, very important, gross domestic. This is the measurement of the health of the economy. You want to know how healthy an economy is, check their GDP status. Okay, if their GDP status is strong, it means that the economy is strong. GDP is very important. Okay, it's a high impact indicator. So there's going to be a lot of volatility when this particular result comes out. So it's the broadest measure of economic activity, and it's a key indicator for the economic set, just like I said. So the percentage of GDP changes shows the growth rate of the economy as a whole. So GDP growth is bad or is negative, okay, there's going to be issues, because for example the US had what was called technical recession. What is technical recession? That means there were two consecutive GDP drop in two consecutive quarters. So when there are two consecutive drop in GDP, it signifies recession. Of course, the US narrowly escaped. Okay, on the third one, it was better than expected, and right now there's a mixed indication in the market whether the US is in a recession or they are about to be in a recession. Of course, we are waiting for the NBER to give us their verdict. Okay, let's head over to housing stats. Of course, if people are building in a particular economy, what does that mean? It means there is prosperity. Okay, If people are prospering, that's when they build. If there's no money, nobody builds. Okay, if people are building in a particular economy, it means the economy is doing well. Okay, so this measures residential building construction project that begun during a specific period of time. So if people are building, it means the economy is doing well. Okay, the economy is doing well. Of course, consumer spending is going to add to the economy. Okay, consumer confidence is increasing. Okay, people are going to spend, and that is going to affect the economy positively. Okay, housing starts was not always a high impact news, but of late, recently, it has become something to reckon with. Okay, so take note of this. Don't look down on housing starts. Okay, so that it will not wreck your technical analysis. All right, so let's talk about industrial production. Of course, if industrial production is good in an economy, that means the economy is doing well. Okay, if it is bad, that means the economy is not doing well. For example, in the UK, in Germany, okay, because of the gas issue with Russia, some companies are not functioning as they are supposed to. Of course, it's going to be bad for the German economy. Of course, if the German economy is not doing well, it means the Eurozone is not doing well because it is the strongest economy in Europe. Of course, you need to know what's happening in Germany. Whatever happens to Germany will happen to the European economy, okay, especially those of the Eurozone. So the measurement of production output from industrial activity gives us a good indicator of the strength of the manufacturing sector. If the manufacturing sector is doing well, the country is doing well. So what you do as a trader, you look for the strength. Okay, does this strengthen this particular currency's economy? Okay, if this economy is strong, their currency is strong, it's going to be bullish, and you are going to go long because you are going to buy. You are an investor. If it is doing badly, it's negative, it's an opportunity for you to go short. Okay, going short means you'll be a seller in this particular market. Of course, interest rates, this has been in the news. Okay, this has been in the news. Of course, unless you are not on this planet and you are not listening to news, okay, especially market moving news. Okay, interest rates are very important. So interest rates are a way of balancing the economy. If there's too much inflation, there's an increase in interest rates. Okay, until it gets to a neutral or to a desired zone. Okay, so like the US, they want their inflation to be at 2%. Of course, right now it's more than 8%. Okay, so interest rate changes have a dramatic effect on capital in and outflows into a country's currency. So when there is a high interest rate, it is also an increased demand for that country's currency and continued price appreciation. Of course, if you raise your interest rate, it is going to attract a lot of investors to your economy. Okay, if your interest rate is 50 and mine is 20, people will go for yours. Okay, people will buy your currency and drop mine. People will go for your economy and they will leave mine. They will sell mine and buy yours because that one is going to give them a lot of interest. Okay, so secondly, if there is the inverse, which is low interest rate, it devalues a country's currency. If your interest rate is low, people are going to run away from your economy. They will sell that particular currency. Okay, they will sell that particular economy. Of course, as an investor, you take what the market gives you. If the market gives you a sell opportunity, you be a seller, you go short. If it gives you a buy opportunity, you be a buyer and you go long. Yes, trade balance, very important. This is the difference between export and import. Okay, you need to know export and import, whether the country is in debt or the country uh, is not really doing well. Okay, so you need to know that. All right, of course, if your export data is very high, it means that what your economy is doing well. If you export more, it means there's a lot of income coming into your particular country. Of course, from the investor's perspective. Okay, and as well as if you are importing, it means people are buying in that particular market. It depends on how you play with this particular key, but of course, If you export more, you get more for your currency. Your currency appreciates more. Okay, so if export is more than import, it means the economy is doing well. The economy is doing well. It means entrepreneurs in that particular country are able to sell their goods outside their company, their country, and receive foreign exchange. Okay, which of course will increase the value of that particular currency. But if you import and import alone, if your import is more than your export, it means that your economy is not doing well. Okay, so that will be bad for your currency. And if it's bad for your currency, investors will come selling your currency. Okay, then they'll go elsewhere and buy what will give them interest. All right, so PMI, Purchasing Managers Index. Okay, this is measurement of the economic health of the manufacturing sector from the point of the purchasing managers. Okay, this is done from a survey from several purchasing managers and is computed. Okay, so if purchasing managers are giving us a good indication for our economy, it means we are doing well. Okay, but if they give us the inverse, of course we are not doing well. So the key thing in fundamental analysis, you are checking to see strength, weakness, buy strength, sell weakness. That's simply put, buy strength, sell weakness. If you see strength, you buy. If you see weakness, you sell. Okay. All right, crude oil inventories, very important news. Okay, oil is having a lot of news these days. So OPEC, okay, OPEC is trying to so at the time of doing this, okay, if you are very comfortable with what's happening right now, uh, OPEC is trying to cut their barrels about by 2 million barrels per day. Okay, they are going to cut supply, and if there's a cut in supply, it means they're going to be increase in demand. And if you know this, okay, you are going to be a buyer, you are going to go long, because if there is increase in demand, which means there's a cut in supply, there's going to be increase in demand. Increase in demand means there's going to be more investors buying oil. Okay, so oil is expected to go higher if this supply curve holds. If it doesn't, oil price is going to fall. Okay, even the OPEC plus are still pushing to see how the price will still keep going up. Of course, Russia is part of OPEC plus, which are 10 countries. Okay, the main OPEC is by 13 countries, so OPEC plus is 10 countries. Okay, so you need to know that. You need to know that they move the market. And of course, Biden is trying to increase their reserve. Okay, he said he's going to reduce their reserve, and he's going to fight back with that, such that if their reserve goes lower, it means that there's going to be supply from the US economy's reserve. Okay, their SPR, call it SPR. So if the SPR reserves is introduced into the market and is reduced, it means there's going to be supply from the US, and if they supply from the US, the price is going to drop. Okay, so let's see how this plays out in the market. Of course, crude oil inventory is from the US economy, of course. Okay, so when there's a more than expected increase, okay, all right, it's a weekly event. Okay, it's a weekly event. Crude oil inventories is a weekly event from the US economy. We want to know how much do they have in their reserve. Do they have more or do they have less, based on consensus. When you hear the word consensus, it is what the investors are thinking, what the statisticians are thinking, what the economists are thinking based on their calculations. So we call it consensus or the forecast. Very important. So a more than expected increase means there's a weaker demand. If there's a weaker demand, what does that mean? It means it's going to be bearish, of course. And if there's a less than expected decrease, there's going to be greater demand, and it's going to be bullish. So a bullish person is going to buy this particular market. Yes, very important. Speaks. Okay, if you've been a fundamental trader, you know what speaks means. And when you see speaks, you see Andrew Bailey speaks, or Lagarde speaks, or MPC member speaks, and so on and so forth. They are very important. They are going to give us key issues concerning their monetary policies. So you see MPC member speaks. Of course, nobody knows what they are going to talk about. They can talk about a lot of things, that can be making the market to move up and down. We call it volatility. The market is going to be highly volatile. So you don't want to be in the market like that. When you speak something good about the economy, there's going to be a spike up. When you speak something bad, there's going to be a spike down. So the strongest news is going to move the price in the direction. Okay, it's going to win the direction, whether bullish or bearish. Of course, you don't want to be in that whipsaw. We call it whipsaw. Prices are violently going up and down. Okay, so when you see MPC members speaks, just know that they are going to talk about what is happening in the economy and what might be the future decision of the economy. Okay, or for example, now when you see the FOMC, that's just for the US economy, Federal Open Market Committee. They can say they want to increase interest rate hike, they want to reduce cut interest rates and so on. So they decide such things. So you need to be watchful of this type of market. It's advisable not to be in the market when these types of news are happening, unless you have maybe a squawk feed or something to give you up to speed before the news. Okay, of course, I'm not talking about insider information. Okay, all right. So news can either be scheduled. Okay, so let's come to you as an investor now. You're an investor, you want to uh, trade. Okay, it's advisable you take note of this. Number one, scheduled or economic calendar. Economic calendar is like a timetable of the news that happens. You need to know on Monday which currency is going to happen, which news is going to happen, what's the impact of the news, which currency is going to be affected. You need to know what was the previous figure. You need to know what the consensus are thinking or what is forecast, and you need to know if it is going to be better than expected, or less than expected, or remaining the same. So you need to know all that. Okay, so that should be part of your trading plan. So maybe on Sunday you can tell yourself, I'm going to plan this week, I'm not going to trade this pair at this particular time in the morning because there's going to be German GDP which might affect euro. I'm not going to trade euro. I'll wait until after the news. Okay, so you need to know all that for Monday to Friday, so you can plan your week ahead to know what to trade and when and what time, what to avoid. Or if you can trade the news, good for you, you can trade it. Okay, so next is unscheduled news. Of course, nobody knows unless you are Nostradamus who can predict the future, or you have a crystal ball, you can tell the future. Okay, nobody knew that the Queen of England was going to die that evening. Okay, of course she died, so it wasn't announced, it wasn't on the timetable. So those are the type of news you need to be wary of. Okay, you need to know about the normal news that's happening, breaking news. Of course, you need to know the one on the timetable, which is the economic calendar. So as you can see on the screen, this is an example of an economic calendar. Okay, as you can see right here, it's for Wednesday, June 22nd, 2022. So on this particular day, this is just a screenshot. So this is showing you that these are the news that we are expecting. Okay, as you can see, we'll see the time, we'll see the currency that is going to be affected, we'll see the impact or the importance of the news, whether it's 2 stars, 3 stars, or 1 star. Okay, when you see 1 star, 1 star simply means it's low impact news. It's not really going to move the market that much. It's not going to cause volatility. Of course, volatility in the market, if there's no volatility in the market, there's no movement in the market, so there's no opportunity for profit. Okay, so volatility is good for the market. So when you say volatility, you don't need to be scared. It's something that moves the market. Okay, all right. So you need to know what are the events, what are the events that were happening on Wednesday, June 22nd, 2022. It's a monetary policy meeting for the Japanese yen. Is 2 stars. When you see 2 stars, it means it is what? Medium impact news. Medium impact news can also sometimes become like a high impact news. Okay, when you see 3 stars, we call it high impact news. There's going to be increased volatility as well as increase in spreads. There will be increase in spread. You see spreads widening and reducing at that particular time. So it's very important for you to take note of. If you don't know about that, it may hit your stop loss and move violently. Okay, so you don't want to be caught in that particular type of situation. So we see the CPI month on month for May, CPI year on year for May, PPI input month on month for May. Okay, so uh, as a trader, what you are concerned with, you need to know, number one, what are the previous results. If you know the previous result, then next, very important, you need to know the forecast is what the consensus are expecting. What do they think based on their calculations, their postulations, and what do they expect the market to be? So this is where is key for you as a trader. Okay, you need to know the forecast. Next is the actual. So forecast and actual are very important to you, very important as an investor, from an investor's perspective. If the forecast is more, it's going to be green, it's going to be good for the currency, you'll be a buyer. As you can see here, the month over month right here, okay, it was good for the British pound. So the British pound is going to go green, it's going to be a spike to the upside. Then year over year remained the same. Can you see 9.1 was forecast, 9.1 was the actual result. Then the PPI, okay, PPI is giving us 1.9% as a forecast and 2.1% as the actual, which means it was very good for the British pound. Okay, so let's head over to what we call the breaking news. Very important, breaking news. These are not on the timetable. Okay, nobody expects breaking news, they just happen. Okay, so for example, this is Donald Trump. This was his Twitter handle. Okay, so it's his Twitter handle, and of course he made a lot of comments when he was on Twitter. Okay, this one he said, I won this election by a lot. Actually, he lost the election. Joe Biden is now the president of the US. Okay, if you check here, you see Twitter gave a disclaimer. Official sources may not have called the race when this was tweeted. He kept doing a lot of things like this and was moving the market. Remember, he was the US president. Okay, the US president has the power to move the world. Let me put it that way, because most currencies, most countries use the US as part of their reserve. Okay, so of course, if you hear the US president talk on Twitter about something financial, just know that it's going to move the market. Okay, they say he won by a lot. Okay, in 2020, during the heat of the COVID-19 pandemic, there was what was called among traders, was called the famous Trump tweets. Okay, we call it Trump tweets. Trump tweets had the power to move the market. Okay, when the minister of health will come and say, okay, in Arizona we recorded 300,000 cases of COVID, you see the US currency will become very weak and start plummeting. Okay, but Trump will just come out and say the US dollar is strong, just on Twitter, and all of a sudden you will see the market spiking to the upward direction, and the US dollar will gain strength. Okay, so he kept doing this, and when it came to his election time, he kept doing the same thing. Okay, and Twitter got tired of him and took him out. All right, so you need to know what the US president is saying. Okay, whatever he says about his currency, okay, can move the world. All right, so you need to take note of all this. Okay, let's move on to another guy who is also a market mover. Okay, he's very popular. His name is Elon Musk. Okay, Elon Musk is the owner of CEO of Tesla, and in April this year he was trying to acquire Twitter by with 44 billion US dollars. Okay, of course at $54.20 per share, and things went south when there were issues about whistleblowing, that some accounts were not owned by humans, they were owned by bots, and of course that made him to had a change of mind. Okay, and there was a lot of litigation and a lot of courts here and there, and things went bad. But recently things are trying to get back because he's trying to reacquire it at the same $44 billion and at the same $54.20 per share. Of course, if you know that this is what is going to happen, of course you are going to buy Twitter stock. Twitter stock rose when he tried to acquire, when this news came out, of course. Okay, when this news came out, the stock of Twitter rose and a lot of people made a lot of money. And when he had a change of heart not to buy, it dropped. So as an investor, that's an opportunity for you. Okay, so things went bad for him, and right now he's going trying to acquire Twitter. Of course, that's going to be good. So when he's buying Twitter, make sure you are ready to buy. Okay, of course, he made a tweet. He tweeted about the Doge coin. Okay, the Doge coin. He loves Dogecoin a lot. He made some tweets and the price of Dogecoin skyrocketed. A lot of people who knew about the tweet followed him. Okay, so if this guy is tweeting about maybe Bitcoin, follow him please. Maybe any coin, whatever coin he's tweeting about, make sure you join the trend because he's a great market mover. Of course, when he sacked his staff, then he started laying off staff, the Tesla stock started dropping. So you need to know about all this. Okay, and then use of technicals to take advantage of the situation. Yes, this guy, yes, he's not smiling. He's not making the Europe to smile. He's not making the whole world to smile. He's taking the world to what was called a global recession. Of course, whatever Vladimir Putin says right now is affecting the market. His war on Ukraine is affecting the market. The sanctions are giving us a domino effect. He's fighting back. He's trying to parley with other OPEC plus members to keep his fight going. Okay, it is his economic war, so we need to know what Putin is doing and how he's affecting the market. So whatever Putin is saying, please take note. Okay, he can do anything it takes, he can do whatever it takes to protect the Russian economy. All right, so let's talk about what you need to know as a trader when you trade, when you want to understand the news. Okay, so for every news release, what you are majorly concerned with is what the forecast or what the consensus are saying. Then you now check what the actual figure is. So for example, if you take a look at this, what you are majorly concerned is number one, is it worse than expected? As you can see here, it shows a forecast of 53.4. It gave us an actual of 52.8, which is a drop. It is worse than expected and it is bad for the currency. Then next, better than expected. As you can see, the forecast was 64k, then it's giving us an actual 66.16k. In this case, it was better than expected. Sometimes the digit may be higher or lower, and which may be good. Okay, so it doesn't mean that because it's a higher figure is good. Okay, it can be lower and be good, just like the crude oil inventories. All right, so we have remaining the same. When price remain the same, it means it is as forecast. Okay, it is the same as expected, so price remains the same. Okay, so like I said, as a trader, you are majorly concerned with what the forecast or what the consensus are saying and what the actual figure is. So when you deduct the forecast from the actual, you get what is called a deviation. That is where the magic happens. So the bigger the deviation, the bigger the reaction. So when there's a bigger reaction than the market expected, what we'll see, we'll call it a surprise. We'll say the market is surprised. Then we're going to see spikes as in either direction. Okay, and it's going to move in a lot of pips. All right, so last but not the least, when there's a surprise, for example right here, as you can see, previous for 4.16 billion, forecast is 4.15 billion, then there was a surprise at 7.43 billion, which was about twice the amount that was forecast. Of course, this is very good for the currency because it is green, and I think this should be a trade balance, and it was very good for the currency. Okay, So you can see here on this chart, this is NFP 5th of August 2022. You can see this spike right here. Okay, that's why you need to be aware of what is happening fundamentally. You might be in profit and all of a sudden there's a drop, and I hope you are using your stop loss, or else and you're using a big lot size, it can wipe your account, and you may be lucky, it may double your account too. All right. Then we have the Japanese government's intervention in the forex market as of September 2022. So you can see this is Japanese, Swiss Japanese yen. There was a spike and price continued rallying down. Okay, I think it gave us about 700 pips to the downside, so you don't want to be on the wrong side of this particular move. Then let's talk about the interaction between key economic indicators. So there is a relationship between all of them. So when there's a positive PPI, purchasing producer price index, so it means there's going to be a higher CPI result. Okay, when there's a positive retail sales, it means there's going to be a better GDP. So when we get to the employment and unemployment areas, when there's high unemployment, when there's high jobless claim, high unemployment rate, of course retail sales is going to drop. Of course, there's not enough money for people to spend. Consumer spending is going to drop. Then when there's positive housing data, it means there's possible durable goods. People will begin to buy a lot of things. People begin to, when you build your house, you want to buy AC, you want to put a lot of things in your house like radio, TV, and a lot of things to better your life. Okay. Then last but not the least is the positive PMI. If the PMI is good, we expect a better GDP. Okay. All right, so this is where we'll call it a day for this webinar. So we'll see you in the next webinar. Please make sure you call your friends and don't miss it. Make sure you trade with TradeLand FX, and you'll be glad you did. Have a nice day ahead. Thank you.